Good Monday afternoon to you. Welcome to the John Sanchez Show on Newstalk 780 KOHL. It's so good to be back with you. I hope you missed me as much as I missed you. My goodness. I'll tell you what, folks, I tell you everything. I don't hold anything back. I did the webinar on Wednesday and I have apologized profusely. I ended up having to cut the webinar short. Normally I go an hour, half hour. It's like, I'm just not feeling good. Within an hour afterwards, I really wasn't feeling good. I caught this flu bug that I know is going around. And I tell you what, I was in bed, well, all weekend, all 5 days. I can't remember the last time that I've had a flu bug last that long. Terrible, absolutely terrible. I missed you tremendously. I thought about you. I could not get myself out of bed to come do the show with you and so on and so forth. And so I apologize for that. But I tell you what, absence makes the heart grow fonder. I tell you, every time I'm away from all of you, I just realize how blessed I am to be able to sit behind this microphone 5 days a week with you and share what I see going on in the markets and help you through your financial challenges and your successes and so on and so forth. So I want to thank Jack and Ryan and everybody for filling in. And it was just obviously a last minute type of thing, but man, oh man, still have a little bit lingering, but overall, we're going to get through and we're going to have a great show today. I promise you that. Speaking of the show, let me tell you what I have lined up for you today. I don't think in 25 years on this station, at least, I've ever done this topic, but it's a topic that I have this discussion with clients all the time. And I don't know why I've never done a show on this. And it occurred to me this morning. It's like, you know what? We need to share this with everybody because it is very important. I've titled today's show, Why the First 5 Years of Retirement May Be the Most Important. Now, you may be saying to yourself, well, wait a minute here. The first 5 years of retirement, what's so very important about that? I wish I could give you a detailed answer to that question. But what I see with our clients is the first 5 years are really the most important of all of your years of retirement. And you think about this, and the way I've structured today's show, I'm going to break this down into certain areas, certain time periods, I should say, like the first couple years 2 through 4, years 5 and beyond. Because in reality, if you think about this, most people think that, okay, I've retired on whatever, let's pick today's date, August 3rd of 2026. They think, wait a minute here, retirement planning's done, right? I just retired. My retirement plan is done. But it's not true. In reality, retirement planning is just beginning the day that you actually retire. I mean, think about it for a second. You spend the next, you have spent, I should say, let me rephrase that. You have spent 30 or 40 years busting your butts every single day, saving for this magical time period, accumulating money, sacrificing, doing all the things that you wanted to do. But guess what? Here's the real challenge. Now you have to make that money last another 30 years, if not more. So the decisions that you make during those first few years can absolutely affect the rest of your retirement. And so today I'm going to discuss what actually happens, what we see happen with our clients during those first 5 years. Again, we'll talk about year 1, what I've titled the transition. Year 2 and 3, reality sets in. Year 4 and 5, now you're in a groove. So if you're getting close to retirement, it's a few years away, maybe it's right around the corner, whatever the case may be, you don't want to miss this because I'm going to bring you again, as I always do, real life scenarios. No textbook junk on this show. This is going to be real life scenarios of what we see happen with our clients. And again, there's something magical about those first 5 years. Like I said, I can't tell you why, why isn't it 6 years? Why isn't it 4 years? It's just what I see is the first 5 years are really the most important ones that you're going to face in retirement. After that, you're going to get in cruise control. You really are. And if everything is done correctly leading up to retirement, hopefully you can get into cruise control well before the 5 years. But many times, even with proper planning and everything laid out like as best as you possibly can, that 5 years is that magic window. So it's going to be a great topic. I can't wait to share that with you. All right. Let's get down to the stock market side of things today. What a way to start the week. Absolutely amazing. Today belonged to the mega cap stocks. We built on last week's strong earnings driven momentum. We embraced the easing of geopolitical tensions over the weekend as the president announced he's going to hold off on any further bombing because negotiations were going to begin again today. And so that news broke on Saturday. Futures moved up pretty good yesterday, 3 o'clock when they start trading. And then it just continued all the way forward. And again, what an incredible, incredible day. Matter of fact, the S&P 500 closed above 7,600 for the very first time since June 2nd. NASDAQ climbed 2.1%, Dow advanced 1.3%, both of those closing at all-time highs. Think about for that for just a second. Let's see, I got sick on Wednesday. I missed you on Thursday and Friday. Wednesday on the show, we were talking about us bombing bridges and utility plants and obviously Iran bombing Saudi Arabia and Kuwait and everybody bombing everybody. That's the way things looked. And here we are, thanks to the president's comments, which God willing they hold true this time, and of course, incredible earnings numbers. One of those I'm going to mention that just reported after the close, Palantir. And the earnings that came out last week, and look where we sit. All-time highs. Absolutely amazing. And this goes back to something for those of you that may be new to the market that I've shared many times, people say, oh, I don't want to get into the market. The market's at all-time highs. Yeah, that's a good thing. And they, in our situation right now, which I have never seen momentum like we have seen. In my 36 years of doing this, I have never seen momentum like we are experiencing in this market. You have geopolitical tensions. You have a lot of things going on. You have a new Fed chairman who appears to be very stubborn about wanting to cut interest rates. And here we are setting records. That is the strength of this economy and the strength of this market, at least as we sit right now. Things can change at any time. But as the saying goes, enjoy the ride while we can. So let me go ahead and get the great news out of the way. Today, the Dow finished up 693 points, a 1.32% gain, closed at 53,178. The NASDAQ rose 540 points, 2.13%, closing at 25,913. And the S&P up 111 points, 1.48%, closed at right at 7,600, right on the nose. The oil price situation, we came off of the lows of the day, but still finished solidly lower. $4.21 decline, $80.36 a barrel. Gold gave up $16.60, $4,090. And really the remarkable thing that was also a major catalyst in the market's going, meaning specifically the bond market's going, we don't need the Fed. We're going to do this on our own. On all this news, bond market said, yeah, you know what? Let's drive these yields down. Let's buy the bonds, drive those yields down. And it was a big decrease in bond yields right across the board. The ever so important 10-year yield down 6 basis points to a close of 469. The 2-year, which is sensitive to the Fed, down 4 basis points, 4.25%. The 5-year down 6 basis points, 440 yield, and the 30-year down 4 basis points at a yield of 523. Now, what's amazing, one thing that did happen in my absence, the level that this 30-year bond got to. I told you on Wednesday, I was very concerned about this because we were right around, if I remember right around 5.15, 5.17, which is the height that we hit that the market did not like roughly a month ago when oil prices really shot up. But here we are at 5.23, obviously well above it, and we set a record. So the equity markets are not paying attention to what the bond market is doing. Not any stretch of the imagination. So let's go into some of the details of today. So again, it was driven by the president saying, we're going to hold off on any bombing, negotiations beginning on Monday, meaning today. The communications sector today, very strong, 4.3%. Thanks to Google, $15.82 rise on Google, 4.44%, 372.47 closing level. Extending its recovery from the recent post-earnings sell-off. Meta today, up $33.53, 6.02% increase to $590.24. Then we move over to the consumer discretionary sector, up 2.7%. Tesla rose $10.87 in that group, 3.49% increase to $322.08. Amazon, amazing. Finally, the stock is doing what I've been anticipating and why we have it in our portfolios. Finally, it is moving up. And boy, last week it moved up towards the end of the week. I believe it was on Friday. And then today, $12.44 increase, 4.58% to $284.02. Again, had very strong earnings numbers last week. Became the latest U.S. company today, by the way. Popped the champagne bottles at Amazon. Why? The company surpassed $3 trillion in market capitalization, meaning the value of the company. $3 trillion. Join the big boy club. Microsoft, another standout today. For a $22.93 increase, 4.93% to 487.65, following last week's earnings report and a solid gain. In NVIDIA, $5.89 increase there, 2.93%, 206.64. I mean, the list goes on. Palantir, as I'll discuss when we come back, had a good regular session, up $2.59, 2.1% to 125.65. Reported great numbers after the close. I'll tell you what the stock's doing. We had the chip stocks participating, Advanced Micro Devices, up $8.49. Several memory companies, including SanDisk, had very strong performance. They've got a lot of earnings in that group coming in the next few days, but SanDisk today up 6.03%, $73.20 increase to 1288.03. The list goes on. Who didn't make money today? Yeah, a couple of the major oil producers, no surprise there. Chevron was down about $3.65, 1.85% loss. The reason I'm laughing, the president came out today, mid-morning, and said he is not happy with Chevron and Exxon, that the companies were earning excessive profits and they should lower their retail gasoline prices. Never have seen a company or seen a president come out and pinpoint companies for making too much money. I mean, Democrats tend to do that. Never seen that from a Republican side. So thought that was interesting. Anyways, where do we sit on a year-to-date basis? All right, here we go. We'll start with the Dow. It is up 10.6% for the year. The Nasdaq's higher by 11.5%. Long ways to go to catch up where we we're on a year-to-date basis. Russell 2000 up 20.2%. And the S&P is higher by 11% year to date. All right, come back, tell you about Palantir, and then we're going to get into our topic, why the first 5 years of retirement may be the absolute very important. Welcome back to the John Sanchez Show on News Talk 780 KOH. I should say, welcome back to a record-setting day. Triple win right across the board. The Dow, the Nasdaq, the S&P closing at record levels. Once again, the Dow gained 693 points, closing at 53,178. Nasdaq up 542.13%, closing at 25,913. And the S&P up 111 points, 1.48%, closing at 7,600. Pretty remarkable day. Also pretty remarkable what happened with Palantir. Highly anticipated earnings report coming out after the close, and boy, oh boy, did the company deliver. Let me tell you what the stock did, as I mentioned earlier, but most importantly, what it's doing in the after hours. Regular session, again, the stock finished up $2.59, closing at 125.65. Right now in the after hours, it's up $17.26, a 13.74% gain to 142.91. So here are the numbers. Numbers weren't spectacular, but they were better than expected, and it was the guidance, as usual, that is driving the stock higher in the after hours. Here's what the company did. They made 41 cents a share in the quarter. Expectation was 35 cents. Revenue $1.94 billion. Estimates $1.8 billion. Revenue climbed. Here's where the stock's getting the boost. Revenue climbed 93% from about $1 billion a year ago. Palantir reported net income of $1.07 billion, or 41 cents a share, compared to net income of $329 million, or 13 cents a share, for the same quarter a year ago. As their CEO, Alex Karp, said, forget consensus. He says, to my knowledge, no business at our scale has even grown half this much. Palantir's U.S. government revenue grew 90% from a year ago to $809 million. Of course, the company is widely known for selling its software to the U.S. government and the military, but its commercial revenue also has accelerated for the first time in quite a while. U.S. commercial revenue surging 149% from a year ago to $764 million, and when taken into account compounding, has jumped 380 going back to 2024. Palantir is now bracing for U.S. commercial revenue in excess, according to the company, of $3.42 billion this year, up from prior guidance of $3.22 billion. Company said its remaining U.S. commercial deals value more than doubled from a year ago to $6.24 billion. Now the shares, if you're looking at a value play, this may be one you want to consider. Shares are down 29% this year due to broadening concern that the AI software trade is running out of steam, and of course growth would slow and blah, 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 blah. But the AI software company lifted the full year revenue guidance today on the analyst conference call to between $8.15 billion from prior guidance of $7.65 billion to $7.66 billion. The CEO said that the strong growth, quote, looks like this is going to go on for at least another 18 months. So congrats to any of you that are Palantir shareholders of recent. Hopefully you're not part of the group that's down 29% or so. All right. I think you're up to date now. Again, oil down $4.21, 80.36. The catalyst to today's growth in record-setting day. Again, the president announcing on Saturday that he's halting any further bombings against Iran as negotiations are going on today. So that's what the street got excited about, as well, of course, as these earnings numbers that I just mentioned and the earnings momentum from last week. All right, with that said, let's get started. why the first 5 years of retirement may be the absolute most important of all of your years of retirement. Once again, if you just joined us, as I said at the beginning of the show, and I want to be real clear, I can't give you scientific proof why the 5 years is so important. I'm just telling you what we see with our clients, just the real life side of it. And as I said also at the beginning of the show, most people think that, retirement planning ends the day they retire. But in reality, it is just the beginning. Because folks, whether you like it or not, and I know that sounds cliche-ish to say that, but I have some clients going, I don't want to live another 30 or 35 years, and they're in their 60s. Others that say, hey, I want to live to 100. Regardless, you don't have control in most cases. Regardless of that, your money's got to last a long time, probably another 30 years. So let's talk about how we break this down into our 5-year time period. All right, year number 1, what I call the transition period. Now, this isn't just, as I've said many times, this isn't just a financial adjustment time period. Going from, hey, my check is deposited in my bank account every single Friday, taxes are withheld, money goes into my retirement, etc., to, I've got to generate this money now. So it's not just that. It's not just the financial adjustment. In many cases, more importantly, it's the emotional adjustment that one must go through. The emotional adjustment. And I tell you, I'll be honest with you. As I laid there in bed for the last 5 days fighting this doggone flu bug, I sat there and I thought about this. It's kind of where I came up with this topic. And I thought, what would it be like if I didn't have my clients to take care of, my radio audience to educate each and every year? What would be my purpose? I have a lot of interest, as all of you know, by the various businesses I have and things. So I don't think I'm ever going to be one of these, if and when the time ever comes that I decide to retire, where I'm going to need, the purpose to get out of bed. But would I go through an emotional adjustment? Absolutely, I would. I mean, I felt myself getting depressed, laying there. It wasn't so bad on Thursday because I was so sick. Friday, okay, the head wasn't quite so foggy anymore, and the vomiting had, subsided a bit, and so on and so forth. But would I go through an emotional adjustment? Absolutely. I did, just 2 days away. I can't imagine being away from my clients and again from you, et cetera, with the emotional adjustment I would go through. And I think everybody would go through some type of emotional adjustment. As I've said, I've never once had a woman client regret retirement. I've had men many times regret retirement because of the emotional side of it. Now, many of you that are, got some gray hairs on the head, you're going to be like me. First thing that happens in that first year of transition, you lose your daily routine. Now, my kids joke with me all the time saying, the older you get, Dad, the more set in your ways and the more set in your routine. And I try not to be that way. I wish so bad I could go back to my younger years where I was as carefree. It's like every day you had a little bit of a different schedule and, you didn't get thrown off. My gosh, the older I get, if one thing in my day does not go according to plan, which happens on the work side of things, but I'm talking more of a routine, like I like to go to bed at a certain time. I like to get up at a certain time. I like to work out at a certain time, so on and so forth. I get mentally screwed up. I don't know about you. I do. I get mentally screwed up. So once again, this is one of the big problems in retirement. You lose that daily routine, that routine you probably had for the last, again, 20 to 40 years. And when that alarm clock's not going off at 5 o'clock, 6 o'clock, whenever you get up when you were working, that's the first step to screwing up your daily routine. And so that's why I always say, get yourself into a retirement routine, R&R, retirement routine. Set that alarm. You don't need to sleep into 8, 9 o'clock every single morning. Set your alarm, whatever time you're comfortable getting up. Probably don't need to do it at the crack of dawn like you did when you were working, but get yourself into that daily routine. Get up at the same time, have your coffee, have your breakfast, work out, whatever you do in the morning. Stick to that. And I promise you, you will ease into retirement better. I've seen it again. I'm going to refer to clients. This is they're my test case with this. I've seen it with some that had very set routines. And that was one of the most important things they said going into retirement is, I no longer have a routine. I can do what I want to do. That alarm clock, got rid of it. I don't need it anymore. And those tend to be the clients that come back to me a year, 2 years later going, you know what? I find myself, instead of going to bed at 9 o'clock like I normally do, I find myself going to bed at 11, 12 o'clock. And then I sleep into 8 or 9 o'clock. And then the day's half over. Then I feel terrible about myself. Then I miss going to the gym. Next thing I know, it's lunchtime. So I'm sitting down on the couch eating a big fat lunch, and on and on and on. And their personal and their health and everything starts to deteriorate. Their mental confidence, their overall physical and mental confidence starts to go down. And it's a miserable retirement. It's so easy to fix it. We're human beings. We like routine, and especially the older we get. Those of you that are young, trust me when I say this, the older you get, the more routine-oriented your life is going to become. And you freak out if your routine gets screwed up. Even if you don't have to get up, make yourself get up. Get up and, again, get that daily routine going. All right, we're just getting started. And, again, the first 5 years of retirement, why they are the most important. Welcome back to the John Sanchez Show on Newstalk 780 KOH. Welcome back to a record-setting day. All three major averages closing in record territory. The Dow rose 694 points to a close of 53,178. NASDAQ up 540, closing at 25,913. And the S&P gained 111 points, closing at 7,600. Again, remarkable day. Still watching some very strong gains with Palantir after that strong earnings report after the close. Stock again up $17.85 in after hours to $143.50 a share. All right, I've just begun our topic, why the first 5 years of retirement may be the most important. So year one, again, is the transition. Again, this isn't a financial adjustment. It's an emotional adjustment time period. So I went through first problem that we see. Clients lose their daily routine. Their self-worth, their confidence starts to go down the tubes, their health, etc. How do we correct that? Start a routine, even when you're retired. Number two. Now, this is a big one for us men especially, because we tend to have the bigger egos than the beautiful women in our life. We lose our work identity. When someone asks you, you entered your cocktail party, barbecue, whatever the case is. What do you do for a living? Oh, I do this, this, and this. Do you feel proud when you say that? Some people are like, I work in construction, or I work in admin, or I this or that. That's fine. Other people, though, they're very, very glued into, I am a CEO, I'm a CFO, I'm this, I'm that, right? They got that identity. Well, what happens when we don't have that identity anymore? What is that going to do to your psychology, your self-confidence? So you have to get comfortable, as the saying goes, in your own skin when you retire, because you no longer have that identity. It's you. People are either going to like you or hate you for you, not because, geez, if I'm nice to this guy, he can get me a job, or maybe he can, they're an employee. Hey, if I'm really nice to this guy at the Christmas party, maybe he's going to put me in for a promotion or a raise or something like that. That's all gone. You've got to be careful and, again, be comfortable in your own skin, as I like to call it, with your own personal identity. Third challenge in the first year, spending too much too quickly. Boy, is that one so true. Now, I was going to say it's not intentional, but in many cases it is. Here's what happens in reality. Excuse me. You're working. You got that list of honeydews a mile long. But face it, you typically have Saturday, Sunday. Last thing you want to do is all the honeydews on the weekend, or on vacation. So you try to squeeze them all in on a weekend. Well, if you're like me, the weekend, it's Friday and you blink and next thing it's Monday morning. You just can't get to them. I've got that problem right now. It's like, I've been trying to finish up my wife's garden since Mother's Day, and it's still not getting done because all I have is the weekends. And a lot of times I'm still working on the weekends. So it's a few hours here, a few hours there, and it drives me absolutely nuts. So when we retire, we don't have that excuse anymore, right? We've got 7 days a week that we can get things done. Well, by getting things done, it costs money. Now we'll get into, buying some of the fun toys and things like that, but I'm talking about the honeydews. Typically what we'll see, and we try to plan for this with clients, we'll ask them in the retirement planning process, are there any major expenses such as home renovations, remodels, maybe you want to move, whatever the case is, that you plan on spending in the first couple of years of retirement? If so, let's try to do it while you're still working, when you have a good steady paycheck coming in and plenty of money and so on and so forth, or let's budget for it. Because the worst thing that can happen to your financial plan is all of a sudden, you're a month into retirement and you go, man, I've got all this time. Here's a common one I come across all the time. I want to build a shop. Client will call me up and go, hey, I'm going to build a shop. I've always wanted a wood shop or a place to fix my cars and renovate my old cars and so on and so forth. Cool. I love that idea. No one loves a nice shop better than myself, but they're not cheap. So do they want to go spend I know you're going to laugh, $250,000, $300,000 or more, or do they want to finance it? They want to finance it. then we should have done it when you were working, right? It's easier to qualify when you've got a job than when you're retired, as I've said many times. So what tends to happen is they start spending money. It's like, hey, you know what? I need to withdraw 50,000. I'm going to renovate the backyard. Or again, I need a down payment for the shop or this or that. So you spend too much too quickly. Well, again, if it's not planned, that screws up your monthly cash flow, right? You have a smaller nest egg to generate your retirement monthly income off of. So be very careful. Try to outline what your expenses are going to be before you go into retirement, especially that first year. Next one, which is pretty much, I don't blame anybody on this one because it's out of our control. You underestimate healthcare costs in your first year. If you don't retire at 65 and become Medicare eligible, again, if you don't have some type of special, maybe you got an early retirement plan or program package, I should say is the word I'm looking for, from your current employer, and they're going to continue with your medical benefits, maybe at a reduced cost or maybe for free until you hit Medicare eligible age. Bless you. Gosh, I hope that's the case. But in reality, many times, it's not the case. So you've got to go out and you got to buy some healthcare insurance on your own for you and your spouse. As I've said many times, I think I just said it last week, $1,500, $1,600, $1,700 a month is kind of the norm if you got to go buy insurance on your own. So think about that for a second. But many of you that have never had to go buy insurance because your employers offered it, now you're going to be going, wait a minute, it's costing me as much for my medical insurance, maybe as my house payment that you've had for the last 20 years, 30 years. Again, it's got to be part of the budget. So don't underestimate your healthcare. If you've got to buy insurance, do all the research prior to retirement. And then the last one I want to mention is being overwhelmed by all of these financial decisions. Because again, you think about it, life's been pretty simple. Paycheck comes in, taxes withheld, money goes to retirement, got a little money going to savings, boom, everything's great. It's all automated for you. Not the case. We try to make it that way in retirement, but a lot of times it's not. So you become overwhelmed. You've never had to deal with this. So my advice there is get involved if you're not yet, while you're still working, get involved in the family finances. Maybe your spouse has handled them up to this point. Both of you need to handle them. Get involved. Know that budget. Know what's coming in. Know what's going out. Know what the big upcoming expenses are. The more you are knowledgeable, the less underwhelmed you're going to be, or overwhelmed you're going to be. It's again, we get overwhelmed when too many decisions have to be made and we don't know enough about them. We can't, as human beings, rationally make all those decisions. And again, you're making them on your own. Hopefully you have a financial advisor such as us or other great financial advisors, and you can run those decisions, those ideas. That's what our clients do. Run them past us. Get that second opinion. That's what we're here for. But if you're self-managing, you got to make those decisions yourself. And again, it can be very overwhelming. So to wrap it up, on this one, build a retirement income plan, create the withdrawal strategy, know your taxes, know your Medicaid, update your estate plan, review your beneficiaries. That's my take in the first year. All right, I'm running out of time very quickly here. I'm going to go to segment 2, year 2 and 3. That's when reality sets in. Welcome back to the John Sanchez Show on Newstalk 780 KOH. If you did not hear, it was a record-setting day with the Dow, the NASDAQ, and the S&P all closing at record levels. Dow gained 694, NASDAQ rose 540, S&P up 111. All right, you made a lot of money in the market. Maybe today was the day you decide to retire. But what did the first 5 years of retirement actually look like? So we just went through year number 1, the year of transition. Let me bunch years 2 and 3, what I call the reality sets in time period. Now, this is where retirees begin making mistakes. Here's an example. They start to overspend, right? Okay, you got through the first year. Maybe those honeydews are done. Now you're like, now I can relax. That dream vacation, that cruise across the oceans, that dream home. You want to become a snowbird. You want that new RV, that brand new truck. All of those things happen because you say, look, I got a year under my belt. It's my time now. Beautiful. Like I said, love you to go spend on the toys. Love you to go spend on the vacation. Just plan for it. Don't overspend. Here's something else that you may not realize that happens in retirement. Your kids and your older grandchildren think that you now have a flashing neon sign that says, Grandma and Grandpa are rich now, or Mom and Dad are rich now, because they must have a lot of money because he was able to retire or they were able to retire. Time to set expectations with your children and your grandchildren. Look at guys. Yeah, we were able to retire through years of hard work and savings and so on and so forth. But guess what? We're on a fixed income now. Sorry, can't help you. So I call these the go-go years. You spend a lot. Everybody wants a little piece of it. Just be careful. protect those brokerage accounts, protect the bank accounts. Because again, you don't want to go back to work. Now, I was going to get into other things that affect you, but inflation and sequence of returns and things, but I don't have the time. So let's go to years 4 and 5. So this is what I call the cruise control time period, right? You got through the first year of transition. You got all the honeydews done. You spent a lot of money. Year 2 and 3, now you start to reward yourself. Got your vacations out of the way and things are going good. And kind of getting settled into this routine, right? You're feeling good about yourself. You got a routine going. This is what you think retirement's all about. Now, this is where I'm going to tell you it's time to optimize. What do I mean by that? This is when you get the sharpen the pencil and you sit down and you go, look it, all right, do we really need to go out to eat 4 times a week, even though we're retired? Probably not. Oh, just found an extra $100 a week. Do we really need to take, 5 vacations a year? Probably not. Your whole life's a vacation now. Just found a couple $1,000 there. You get my point? So you got it, what I call, you got it out of your system. Best analogy I can give you, remember when you were in high school and you got senioritis that last 2 or 3 weeks, or in my case, a month before that graduation day came, and you've mentally checked out. You're physically in your classroom, but you mentally checked out. It's like, I'm done. I'm going to graduate. I'm done. And so what ends up happening during that time period, you begin to slack off, right? You don't pay attention to your coursework and start to slack off on the test. Boy, I'm talking from personal experience. And before you know it, graduation's here and you're like, oh man, I really screwed up this last month. I need to get my act together. Well, it's the same thing in retirement. You got those last couple of weeks of high school. Well, now you got your first, 3 years, 4 years of retirement out of your system. Now it's time to go to work. Sharpen the pencil. Not telling you to become, miserable in retirement. This is your time period. But just know where the money's going. It's a great time also to take a look at the investments. Am I allocated correctly? Can I handle the risk? Have I stress test my portfolio? What happens if the market drops 30% instead of these days where we just go up day after day after day? Now you start looking at worst case scenarios, not to be negative, but to be prudent with your money. This is what you need to do in your retirement. Because again, none of you want to go back to work. So the cruise control years, but I call it the fine tuning years, years 4 and 5. So here's 5 things every new retiree should do. Build a written income plan as well as financial plan. Review your investment risk. Create tax efficient withdrawal strategies. Review your Medicare, review your healthcare, and meet at least annually with your advisors. If you do that, I'm going to leave you with this thought. First 5 years of retirement aren't about getting rich. They're about protecting everything that you have spent your entire life building. A great retirement is not determined by how much money you have. It is determined by how wisely you manage it during those first few years. That will set the stage for the rest of your retirement life. God bless. Have a great afternoon. We'll see you tomorrow on the John Sanchez Show.